Good day. We are the Group 6 and we're going to present to you Chapter 10, which is Auditing the Expenditure Cycle. This chapter has 3 different sections. I'm going to discuss to you the first section, which is the Expenditure Cycle Activities and Technologies. This section examines alternative information technologies used to support expenditure cycle activities. There are 3 of these alternative information technologies. The first of these is the purchases and cash disbursement procedures using batch processing technology. Second is the re-engineering the purchases or cash disbursement system. And the last one is the overview of payroll procedure. Let's now discuss the first alternative information technology. Here is the batch purchases system. And here's its continuation. To discuss the batch purchases system, in the data processing department, there are 4 steps. Step 1 starts with the monitoring of the inventory records. This control function is actually already initiated during the revenue cycle, if merchandising, or the conversion cycle if manufacturing. When inventories are reduced by sales or are used in production and they have fallen to their reorder points, the system will create a record, which is the next part, the creation of open requisition file. This record contains the inventory item number, a description, the quantity to be ordered, the standard unit price, and the vendor number of the primary supplier. Upon receipt of the purchase requisition, we then proceed to the preparation of a 5-part purchase order in which copies go to the vendors, accounts payable, receiving, data processing, and the purchasing department's own file. Before going into step 2, there are 3 alternative approaches for authorizing and ordering inventories. These are the 3 different methods. Here is the alternative 1, and here's the alternative 2, and the third alternative. In alternative 1, the system prepares the purchase order documents and sends them to the purchasing department for review and signing. The purchasing agent then mails the approved purchase order to the vendors and distributes copies to other internal users. In alternative 2, it makes the ordering process faster by distributing the purchase orders directly to the vendors and internal users, thus bypassing the purchasing department completely. While the alternative 3 represents a re-engineering system that uses electronic data interchange or EDI, and this method produces no physical documents. Instead, the computer systems of both the buying and selling companies are connected via a special telecommunications link. The buyer and seller are parties which the entire ordering process is automated and unimpeded by human intervention. In each of the 3 alternatives, the authorization and the ordering steps in the processes are consolidated and performed by a computer system. Now let's proceed to step 2. In step 2, the purchase order in step 1 is used to create an open purchase order record and to transfer the corresponding records in the open purchase requisition file to the closed purchase requisition file. When the goods arrive from vendors, the receiving clerk prepares a receiving report. Copies go to purchasing, accounts payable, and data processing. In step 3, the data processing department runs a batch job that updates the inventory subsidiary file from the receiving reports. The system calculates batch totals of inventory receipts for the general ledger update procedure and then closes the corresponding records in the open purchase order file to the closed purchase order file. When the accounts payable clerk receives the supplier invoice, he or she reconciles it with the supporting documents that were previously placed in the accounts payable pending file. The clerk then prepares a voucher, files it in the open voucher file, and sends a copy of a voucher to data processing. In step 4, a batch program validates the voucher records against the valid vendor file, adds them to the voucher register, and prepares batch totals for posting to the AP control account in the general ledger. Each day, the system scans the due date field of the voucher register for items due. Checks are printed for these items, and each check is recorded in the check register. The checks, along with the transaction listing, are sent to the cash disbursement department. Finally, batch totals of closed accounts payable and cash disbursements are prepared for the general ledger update procedure. The totals of closed accounts payable and cash disbursement should balance. The cash disbursement clerk reconciles the checks with the transaction listing and submits the negotiable portion of the check to management for signing. The checks are then mailed to the suppliers. 1 copy of each check goes to accounts payable and the other copy is filed in cash disbursement along with the transaction listing. Upon receipt of the check copies, the accounts payable clerk matches them with open voucher and transfer these closed items to the closed voucher file. And this concludes the expenditure cycle process. The next alternative information technology is the re-engineering the purchases or cash disbursement system. What I discussed earlier is known as the automated system, in which it simply replicates many of the procedures in a manual system. However, it tends to be labor-intensive and costly. To produce considerable savings, re-engineering is used, and here's an example. The Ford Motor Company employed more than 500 clerks in its accounts payable department, in which most of the clerks' time was devoted to reconciling discrepancies between supplier invoices, receiving reports, and purchase orders. To solve the problem, Ford initiated trading partner agreements with suppliers in which they agreed in advance to terms of trade such as price, quantities to be shipped, discounts, and lead times. With these sources of discrepancy eliminated, Ford re-engineered the workflow to take advantage of the new environment. Since the financial information about purchases is known in advance from the trading partner agreement, the vendor's invoice provides no critical information that cannot be derived from the receiving report. By eliminating this source of potential discrepancy, Ford was able to eliminate the task of reconciling vendor invoices with supporting documents for the majority of purchase transactions. As a result of its re-engineering effort, the company was able to reduce its accounts payable staff from 500 to 125. Here are the procedures that Ford performed in their data processing department to produce a considerable savings to their company. I'm not going to read all of them, but you can find them on the soft copy of the module. But basically, what they did is that they applied a re-engineered system to their company to cater their needs and to be able to save money and time. However, we can't avoid technology control issues. That's why we're going to compare the difference between an automated system and a re-engineered system. In automated system, the inventory control is improved. One advantage of the automated system over manual is its improved ability to manage inventory needs, where inventory requirements are detected as they arise and are processed automatically. Next is the better cash management, in which this system promotes effective cash management by scanning the voucher file daily for items due, thus avoiding early payments and missed due dates. In addition, by writing checks automatically, the firm reduces labor costs, saves processing time, and promotes accuracy. The next one is less time lag. It reduces the delay between the arrival of goods in the receiving department and recording inventory receipts in the inventory file. The next one is better purchasing time management. By freeing purchasing agents from routine work such as preparing purchase orders and mailing them to the vendors, attention can be focused on problem orders such as special items or those in short supply, and the purchasing staff can be reduced. Last would be reduction of paper documents, in which all operation departments create documents which are sent to data processing, and which data processing must then convert to magnetic media. On the other hand, the re-engineered system, this system addresses many of the operational weaknesses found in the automated system. Specifically, the improvements in the system are the following. 1. It uses real-time procedures and direct access files to shorten the lag time in record keeping. 2. It eliminates routine manual procedures through automation. And 3. It achieves a significant reduction in paper documents by using electronic communications between departments and by storing records on direct access media. However, there are still control implications like segregation of duties. This system removes the fundamental separation between authorization and transaction processing. Here, computer programs authorize and process purchase order and authorize and issue checks to vendors. Next is the accounting records and access controls, in which the system maintains accounting records exclusively on magnetic disk. To preserve the integrity of these records, the organization must implement controls that limit access to the disks. Now for the last alternative information technology, which is the overview of payroll procedures. Payroll checks can be processed through the regular accounts payable and cash disbursement system, same as the automated system I've discussed earlier. However, as a practical matter, this would have a number of drawbacks. First, general expenditure procedures that apply to all vendors will not apply to employee. Payroll procedures differ greatly among classes of employees. There are hourly employees, salaried employees, piece workers, and commission employees, and it requires special accounting procedures for employee deductions and withholdings for taxes. Next is the writing checks to employees requires special controls. It is easier to conceal payroll fraud when payroll checks are combined with trade account checks. Next is the general expenditure procedures are designed to accommodate a relatively smooth flow of transactions. Payroll activities are discrete rather than continuous. Disbursements to employees occur weekly, bi-weekly or monthly. To periodically impose this processing burden on the general system may have an overwhelming peak load effect. Also, because payroll systems run infrequently, such as weekly or monthly, they are often well suited to batch processing and sequential files. Now, to compare the re-engineered payroll system to the simple automated system, for moderate-sized and large organizations, payroll processing is often integrated within the Human Resource Management or HRM system. The HRM system captures and processes a wide range of personal-related data, including employee benefits, labor resource, planning, employee relations, employee skills, personal actions such as pay rates, deductions, and so on, as well as payroll. HRM systems must support real-time access to personal files for purposes of direct inquiries and recording changes in employee status as they occur. Moreover, the re-engineered system differs from the simple automated system described previously in the following ways. 1. Operations department transmit transactions to data processing via terminal. 2. Direct access files are used for data storage. And 3. Many processes are now performed in real time. Here are the key operating features of this system. First is personnel. The personnel department makes changes to the employee file in real time via terminals. These changes include additions of new employees, deletions of terminated employees, changes in dependents, changes in withholding, and changes in job status. Next is cost accounting. The cost accounting department enters job cost data, real-time or daily, to create the labor usage file. Next is timekeeping, which is upon receipt of the approved time cards from the supervisor at the end of the week, the timekeeping department creates the current attendance file. In a re-engineered payroll system, these are the following tasks that are performed in the batch process. And that concludes the first section of the auditing the expenditure cycle.
This is in continuation of Roma's report. Let's have the expenditure cycle audit objectives, controls, and test of controls. Relationship between management assertions and expenditure cycle audit objectives. First, the existence and occurrence. One of its objectives is to verify that the accounts payable balance represents amounts actually owed by the organization at the balance sheet date. Second, completeness. Verify that the financial statements reflect all wages for services performed during the period covered. Third, accuracy. It verified that payroll amounts are based on correct pay rates and hours worked and are accurately computed. Fourth, rights and obligations. It established that that accounts payable and accrued payroll recorded at the balance sheet date are legal obligations of the organization. Fifth, valuation or allocation. It verified that accounts payable are stated at correct amounts owed. And the last one, accuracy. It ensured that accounts payable, accrued payroll, and expenses reported for the period are properly described and classified in the financial statements. Let's move to the input control. Input control are designed to ensure that transactions are valid, accurate, and complete. Control techniques vary considerably between batch and real-time systems. The following input controls are related to the expenditure cycle operations. First, we have the data validation controls. It intended to detect transcription errors in transaction data before they are processed. Since errors detected early are less likely to infiltrate the accounting records, validation procedures are most effective when they are performed as close to the source of the transaction as possible. Second, testing validation controls. Data entry errors that slip through edit programs undetected can cause recorded accounts payable and expense amounts to be materially misstated. Third, batch controls, used to manage high volumes of transaction data through a system. The objective of batch control is to reconcile output produced by the system with the input originally entered into the system. Next, testing batch controls. Provide the auditor with evidence relating to the assertions of completeness and accuracy. Testing batch controls involves reviewing transmittal records of batches processed throughout the period and reconciling them to the batch control log. Purchases authorization controls. actually occurs in the revenue cycle when goods are sold to customers. At that time, the system compares the quantity on hand with a reorder point to determine if the inventory needs to be reordered. Testing purchases authorization controls. Controls can cause unnecessary and incorrect orders to be placed with vendors. Employee authorization. It used to effect changes in hourly pay rates, payroll deductions, and job classification. We have testing employee authorization procedures. It identifies current employees, communicate their status completely and correctly to the payroll function, and monitor adherence to employee authorization procedures. Now let's have the process controls. Process controls include computerized procedures for updating files and restricting access to data. Depending on the level of computer technology in place, process controls may also include physical controls associated with manual activities. First, let's have the file update controls. These controls ensure that each run in the system processes the batch correctly and completely. Access controls prevent and detect unauthorized and illegal access to the firm's assets. Inventories and cash are the physical assets of the expenditure cycle. Testing access controls lies at the heart of accounting information integrity. In the absence of adequate controls, supplier invoices can be deleted, added, or falsified. Individual payroll account balances can be erased, or the entire accounts payable file can be destroyed. Next, physical controls include manual activities and human actions to initiate computer procedures to safeguard the assets of the organization. Testing physical controls, inadequate segregation of duties and lack of supervision can result in fraud and errors that can cause financial statements to be materially misstated. The exposure issues here are similar to the access control issues discussed earlier. Let's proceed to the output controls. Output controls are designed to ensure that information is not lost, misdirected, or corrupted, and the system processes function as intended. For example, daily summaries of cash disbursements to vendors and inventory receipts should go to the managers to report the status of their operations. Output control can be designed to identify operational and internal control problems. Output controls includes accounts payable change report, a summary report that shows the overall change to accounts payable. This figure should reconcile with total vendor invoices received, total cash disbursements, and the general ledger. Next, we have the transaction logs. Every transaction successfully processed by the system should be recorded on a transaction log, which serves as a journal. Transactions rejected because of input error should be placed in an error file, corrected, and resubmitted. The transaction log and error files together thus account for all the economic activity. Next, transaction listing should go to the appropriate users to facilitate reconciliation with input. We have the logs of automatic transactions. To maintain an audit trail of these activities, all internally generated transactions must be placed in a transaction log, and a listing of these transactions should be sent to the appropriate manager for review. Unique transaction identifiers. This feature is the only practical means of tracing a particular transaction through a database of thousands or even millions of records. Error listing. A listing of all error records should go to the appropriate user to support error correction and resubmission. And the last one, testing output controls, involves reviewing summary reports for accuracy, completeness, timeliness, and relevance to the decision that they are intended to support.
Good day, everyone. In continuation with Raymond's report is the substantive test of expenditure cycle accounts. Here, we talk about the substantive test that an auditor may perform to achieve the audit objectives related to the expenditure cycle. First, let us have a review about substantive tests. Substantive tests are detailed investigation of specific account balances and transactions performed by the auditor to detect material misstatement or fraud at the assertion level. Expenditure cycle risks and audit concerns. Primarily, external auditors are most concerned with the potential for understatement of liabilities and related expenses. In broader context, it includes process efficiency, fraud, and losses due to errors. These risks have happened due to attempts of improving the financial statements, thereby suppressing the recognition and reporting of valid liabilities just to have a good report that is attractive to investors. The following discussions is based upon the use of ACL software applications. Now let us proceed to the substantive tests performed in the cycle. First thing we do is to have an understanding of the data. The auditor needs an understanding of the systems and controls that produce the data as well as the physical characteristics of the files that contain them for analysis. The figure shown is the file structures for expenditure cycle. These structures indicate the key data and logical linkages between files. So we have here the inventory file, purchase order file, purchase order line item, receiving report file, check register file, disbursement voucher file, and supplier file, in which you can see the key data of each file that is traced by the broken line. This figure shown is the basis of the audit procedures described. Testing the accuracy and completeness assertions. In this case of the expenditure cycle, an analytical review can provide the auditor with an overall perspective for trends of accounts payable and related expenses. This is to have an analyzation of the changes of these accounts from period to period. You can also compare current expenses to historical expenses and management budgets to note for the unusual trends or variances and know its cause. Performing an analytical review can lead the auditor to extend the substantive test or may also provide an assurance that transactions and account balances are accurately stated and complete, thus reducing the level of substantive test to be performed. Next is to review disbursement vouchers for unusual trends and exemptions. This involves the scanning of data files for unusual transactions and account balances in identifying potential audit risk. An excessive purchase from a single supplier may reflect an unusual business dependency, while a large number of small volume suppliers may reflect a highly inefficient purchasing process. Purchasing a large volume of items from a single supplier may be harmful to the firm, especially when the supplier cannot deliver the item or has increased its price. It may also signify that there may be a fraudulent relationship between the supplier and the purchasing agents or the management. Having a large number of small suppliers may also indicate that a valid vendor approach to purchasing is not in use, and management may consider reducing the number of these suppliers and increase order size in order to decrease the number of orders placed. Another activity that may involve is reviewing for accurate invoice prices. This is the comparison of prices on suppliers' invoices to original purchase order prices. In reviewing, significant discrepancies may be found from the expected and actually charged prices, which may be due to clerical errors, failure to review supporting documents before authorizing a payment, or the AP personnel has exceeded his authority. Thus, it is very important to review the documents to prevent a material misstatement of accounts payable to take place. Testing the completeness, existence, and rights and obligations assertions. First, we have to search for unrecorded liabilities. It involves the examination of disbursement voucher and receiving report files. Each receipt of inventory should match a corresponding disbursement voucher. From these files, the auditor then attempts to identify in the receiving reports transactions that have not been recorded as liabilities. Next is to search for unauthorized disbursement vouchers. By searching for unauthorized disbursement voucher, an auditor may find unsupported disbursement voucher signifying an attempt of fraud or a poor control environment in which multiple payments are made for the same purchase. The multiple payments is either due to malfunctioning of computer programs, data entry errors, failure of authorization controls, and dishonest vendors. Occasionally, there are dishonest vendors who send two supplier invoices with different invoice numbers for the same purchase. Thus, this situation will require a further examination in consultation with appropriate management. Audit payroll and related accounts. The auditor performs analytical procedures and reviews of cash disbursement made in the following period. The auditor should test the mathematical accuracy of payroll summaries and trace totals to the payroll records and to the general ledger accounts. All in all, substantive test serves as evidence to support the assertion that the financial records of an entity are complete, valid, and accurate. That would be the end of Chapter 10, and thank you.